June at 2:30 p.m. Call the meeting open. We don't have any apologies or leave of absence requests. We've conducted the traditional owners acknowledgement this morning. Thank you, Councillor Duff. Does anyone have any conflict of interest matters in relation to their budget items on the agenda? If not, we'll move on to the confirmation of the previous minutes and move that the minutes of the Budget Committee meeting held on the 2nd of June be received. Do we have a seconder? Yep, thanks, Councillor Potter. Those in favour? Carried unanimously. On to the next item, the first item, which is the Communities Budget for 21-22. And that's item 6.1. So we'll hand over to our Finance and Communities team, Mr. CEO. Thank you.
Mr. Mayor, again, given while Pete's in the room and Communities has been broken up over a couple of different pieces, we, similar, I suppose, to infrastructure, whilst we've been just adding them in order as they've been coming onto the line for the agenda, would it be with the leave of the meeting that we deal with finance and corporate, since we've got all the staff here at the moment now, and we were able to present that as a whole unit the other day, barring the rates discussion still have to take place. But certainly we've got finance, corporate and fleet, and even if we got that one knocked over this afternoon, that'd be terrific if possible.
Thank you, Mr. CEO. So I'll move the procedural motion that we move the finance and fleet to escalate that to the first item, to the next item on the agenda. Do we have a seconder? Yep, thanks, Councillor Duff. Those in favour? Carried unanimously. Sorry. Thank you, Mr. CEO. So we'll now go General Manager Jarvis to Finance and Fleet. Thank you.
Thank you, through you, Mr. Mayor. Now, there haven't been the budget that we're presenting today is the budget that we workshopped on Monday, with no major changes at all, so I don't know how you want to deal with this, Mr. Mayor, but happy to, yes, do we have access to the income statement?
Yep. If we can get the statements up on the screen, we can work through them.
So whichever way you want to proceed, Mr. Mayor, happy to cooperate.
Thank you.
So Susan, what we'll do is we'll do same as on Monday, finance and corporate less fleet, and then deal with fleet separate. Sweet. And then we could, depending on how we go, if we get through the op, we could have a crack at the capital for fleet. Would that be, possible? Yeah.
Through you, Mr. Mayor.
And that'll pick up the question from this morning. Yeah.
Okay. Through you, Mr. Mayor. I'll just run through the finance and corporate income statement that we workshopped the other day. So for our fees and charges, we are proposing a $29,500 increase. This is due to your rate searches and the volume that we have coming through currently. You can see that the actuals are tracking higher than that. However, because this financial year was an unprecedented year in rate searches, we've taken a historical 3-year average to come up with that proposed budget. It can be adjusted throughout the year if we do get the volume and it maintains. Your interest received, this has had a $396,000 decrease, and this is due to the investment interest. It's a flow-on effect of our first quarter adjustment where we adjusted this out then. We're not expecting that that's going to change in the next 12 months. For your rates, levies and charges, this model currently has your 2% assumption for your general rates. However, you're not seeing the full amount of revenue there because we've de-recognised the memorandum due to the accounting standards. So that's offsetting there. For your grants, subsidies, contributions and donations, that $176,000 again is a flow-on effect from our first quarter budget adjustment where there was a decrease in the federal assistance grants. Now we have had the early payment released for this year, and it's currently $400,000 less than we were anticipating. So this financial year we'll see a $400,000 hit to our income statement. And I guess the discussion then is what we would like to do and whether we leave that budget alone or whether that's going to have a flow-on effect into the next financial year. At this point, I don't have. So we get 3 quarterly payments. At the moment, I think they're about $796,000 each. I don't know what they're going to be. I haven't had any indication on what they're going to be, and we don't know what next year's early payment is going to be either. So historically, we've taken the prior year actuals as our starting base for the next financial year. And I guess that would be the most material change to this, is if we've got to decrease that 7,035 down to the 6,624, I think it was, Mel. So that was a bit of sad news. So in your expenses, your depreciation has increased. However, there's an offsetting decrease in fleet. The register where it posted to the same ledger item has now been split and separated. So fleet now has its own register, and ICT now has its own posting string as well. So although that is 374 increased, there is a decrease in fleet for that. Your donations, that's made up of your community helicopter, your rating relief and remissions, your RADF, community grants, discretionary funds. And I think we did have a discussion that we're going to leave community grants alone at this point in time. So yeah, that's as we workshopped. Your employee benefits, there's an increase of the 326. Now that's some of that will be EBA, some of that is the realignment of the corporate branch, and there's also there's also a trainee. There's also trainees in there as well. So finance costs, that's your bank fees, your internal finance charges, the $452,000 decrease. This is due to the dividends and how we reallocated them. Your materials. So with your materials, although there's a $217,000 increase, you had a $300,000 increase in the SaaS license. So there's actually an $80,000 saving throughout all the different areas for that line items. Your plants had a decrease in 11,500. Is based on the current use at the moment, but again, this will be reviewed throughout the year as plant and fleet review progresses. Everybody's business unit will be affected as we go through, and we'll fix them up in the quarterly reviews. And your services currently, what's allocated in there is your AMS, which is your Tech One managed services. There's a rates review, centralised procurement, SPECT, Billsy, help me out. InSync and cybersecurity is what makes that up. So I guess if there's any questions, or if you want to go down into the revenue and expenditure, I can send that through to Lynelle and she can put that up as well.
Yeah, thanks, Lena. Councillors, any questions before we move into the detail? Councillor Shoemaker?
Thank you, Mr. Mayor. My only question, just in relation to that, the $400,000 difference, the decrease in the federal assistance grants, because we know that, I just wasn't sure from what you just said, sorry, so just seeking some clarity, because we know that, are we proposing to model that in our budget, or are you proposing we use last year's figure and then do a first quarter review?
I'll go first because I'm just diving for the email. The difficulty is, Council, whilst it may be, we actually, it's almost a known unknown. I'm just diving to where they bring forward payment, if you just bear with me. So the email reads, federal government has confirmed so this is direct from the email. Federal government has confirmed that approximately half of the 21-22 financial, approximately half, so they get very flowery, would be brought forward and paid in this financial year. They've now made the payment and your council will receive it shortly. So it's lovely. The money's in the bank. Council's allocation, please see the published schedule. Please note, these figures should not be used for budgeting purposes as they're calculated on the 2021 allocations. So they haven't completed the 21-22 allocations, nor will they advise us. And this is where, if I can, I know, probably going to sound like I'm moralising for a bit, but this is the bit I love about QTC auditors and the government of all persuasions. We have to have a 12-month budget, okay, fine. We have a 3-year budget, then we have a 5-year and then a 10-year long-term financial forecast. We have one of our major and significant funding sources. We have no idea from year to year what it is. And then with the movement and the way they're now dealing with the brought forward payment, so they're not making the brought forward payment on a static number. They're having a look at last year. So what I spoke about previously with councillors just in discussion, we will receive the same cash amount. So they won't. So we'll get our $7 million odd, which they give us, which is lovely and terrific. So they paid 3.8 of that last year as the brought forward number, because that's roughly based on the year's previous grant, and so $400,000 that we're going to be short this year actually shows up in last year. So it's a book entry. But it's just really frustrating because, again, the book entries, and for those, I've said it 1,000 times and I'll say it 1,000 times still, this is where our books don't reflect the nature of our business, because we're actually compliant with the accounting standards and how we deal with the grants, but it actually doesn't show. So it gives this year's result nearly $500,000 worse outcome, which is a stroke of a pen by an entity that we have no control of, no say in, no input into, and it just makes our books look bad. Now, that will, again, I would imagine it will flow through. So all the councils that got increases in the last 12 months through the grants where we got a decrease, their books will look better and ours will look worse, but yet everyone's actually the same. So, and then they talk about financial sustainability of councils, and you've got this arbitrary number being thrown around. I'm being flowery, but it just frustrates me because it gets chucked around like confetti, and people talk about sustainability of local government and things, and it's actually just an arbitrary number that's a book entry that makes no difference to our cash position. So, yeah, I would be, Selena was, and Susan have not argued, but suggested dropping it down. I'm probably of the mind to keep it as it is, because you would expect that we would hope anyway, and we'll be certainly advocating that we don't get any less than what we had last year. But it's really a lottery. You could do either, but it's just hard to know until they release the numbers, probably somewhere in July, August.
Yeah, thank you for that clarity. I can certainly see both sides, and it's a giant inhibitor for local government as an industry, I think, particularly in terms of sustainability moving forward. And I'm probably in two minds with that as well, to be honest. I'm kind of half supportive of actually demonstrating it on our books, that loss, so that we can plan and prepare for that. But I can see what you're saying as well. And I know we can advocate, but at the end of the day, today, the fact is that we know that there's a $400,000 decline, and that will hurt us. So we're going to have to find contingency in our budget to meet that, I guess, is my thinking. Or is that 400,000 accounted for in terms of unfunded depreciation?
Would be arranged. The 400,000, the only known number we have is will be captured in this financial year. So where it will show up is in. So we were hopeful that we'd bring in the deficit this year. We've pulled it back to about that 3.4, 3.5. I mean, it'll change end of year. So let's pretend we've pulled it back to 3.4. Well, that will show us 3.8 this year. So the only known number is for this financial year. Next year is up in the air.
Mr. CEO, when are we normally notified? July, August?
Yeah, generally late July. So you wouldn't hold your budget off, and this is, again, no, you would never hold your budget back deliberately for fags. It's just you've lost the first month already of the year, and then rolling in. So at best guess, they haven't told us yet, but it'll come in somewhere around late July, early August.
This stage, we haven't got any factors that we believe would give rise to a reduction. Last year we had a recalibration of our road kilometres, but nothing along those lines this year. General managers, that could give rise to that we know of at this stage anyway.
Not that we know of, Mr. Mayor, but yeah, you can't foresee these things. There is a white paper at the moment being circulated about fags that we will respond to as well, about the distribution of the funds, and they're reviewing that as we speak. But that's in no time. That's not going to help us with this budget there. But we haven't had any no revals or anything considerable there that I believe would affect our fags there. And as the CEO alluded to, we did the estimate. there that based on last year's forward payment, which was round figures, 3.8 mil we received. Well, the early payment we just received yesterday was 3.4. So there it was 409, nearly 401,000 less than last year, their prepayment of last year.
So, Mark, we've come down 400,000 in the early payments, and we're hoping, by what I'm gathering, the overall payment will be consistently the same over the 2 years. Is that the comment that's been made?
Not hope. The rationale that you use is over the only and I best use language. My theory on it is that all you can do is be consistent. So you forever budget on what you got last year. Now there's movement up and down, so there's winners and losers every year. But if you consistently budget for the only way that we can, without going mad trying to work it out or unscramble the egg. And if you look at our graph since amalgamation, FAG's gone down, down, down. Then about 2-3 years ago, it started to go back up again, and correct me, maybe a bit more, a bit less. And then last year it dropped again. So I've worked with other councils where that is like that nearly every year. It just, they calculate the methodology. It's the total money available in the pool. And even with the road changes last year, we think that may have had an impact on it, but no one will actually give you a straight answer as to what causes that change. There's a whole raft of gobbledygook. I'm probably being very uncharitable, but there's a whole raft of gobbledygook about why it goes up and down. And we've already committed. We absolutely will be making a submission, and certainly the mayor's raised it when we're in Parliament. The other one down with the ministers the other day. We can pull it out, and then your first quarter review. My own reluctance is like you may be showing up a really bad circumstances and hurting yourself as far as cutting other operational costs or depreciation or capital programs in that first quarter. I probably prefer to leave it as it is, that we budget on last year's amount and then deal with it in the first quarter review like we did last year. Okay, we took the hurt in the first quarter review because FAGs went down and interest went down. But then at least from the first quarter review, we knew where we were. And as councillors will recall, we're around that $3.5 million deficit last year. And then we actually, first quarter review with the changes in revenue, we went up to the 4.5, and then we've been able to work it back. I'm very, very proud of the fact that we're able to get that back. We've absorbed that $1 million loss in revenue. That's probably why I sound a bit frustrated with this, because like all that hard work just gets wiped out in 20 seconds in a stroke of a pen. But yeah, so what council does, there's no wrong or right answer. There really isn't. So you either adjust it now and your books either look better or worse now at the budget meeting, or they look better or worse at the first quarter review. Really, it's where do you want the better or worse to sit? Yeah.
So overall, we're looking at a $7 million over 2 years.
Oh no, 7. That's 7 per year. Last year's allocation was $7,024,612. So that's 7 million. So that's where we were. The year before, Selena, we were 7,243,000. So we lost 220,000 in that through whatever the methodology was last year. So year before that, so 2018-19, we were 6,998,000. So it had a $300,000 jump nearly in 1920. And then they pulled it back 220 in 2021. You go back before that, 17-18 was 6.7 million. So it jumped up 200,000 there. But 16-17, it was 6.8. Now, you tell me what, again, mechanical, DeBono's hat, my practical hat on it, you tell me what happened between 16-17 and 17-18 to make that sort of a change. Why would you go down? It's just, and my argument from Auditor General all the way through at different forums over the years, I've argued this tooth and nail, is when they do these adjustments, they should never take a council backwards unless there's like a mitigating reason or they've deliberately got their hands in the till and using the sandpaper on the ball type cricket analogy, like where they've been caught cheating. Okay, fair cop. If you deliberately cheat, you do it knowing what the consequence may be. But if the methodology is moving it around, even if they have to smooth it out and say, okay, you guys are going to be down 200 this year, and if we've got a forecast for 10 years or 5-year forecasts, they've got an idea what their pool is. They can at least give us 3 years out, and they say, okay, over the next 3 years, guys, it's like rates averaging. We'll average out. So you're going to drop back 200,000 this year, but we're going to hold you. So next year you would have got a $50,000, $100,000 increase, so you'll still be the same. And over 3 years, they average it out, so you don't go backwards. You can at least budget with certainty. That, in a perfect world, if I was king, would be what I would be doing. No council would ever go backwards unless they're, and again, fair cop if they're cheating. And councils have cheated over the years. They've falsified their returns. Don't recommend it. And as an organisation, as a culture, we don't cheat. So the other bit with the road stuff that does come up on occasions, and I've said this again to anyone who will listen to me, they're actively discouraging councils to sort out their asset. With all the talk about assets, they're actively discouraging councils to sort out their databases and their registers and everything else, because the moment you're honest or get it cleaned up and start, you're actually financially punished. So why would you go through the pain of sorting out? So the councils like ours that have, and we want integrity in those systems, are cleaning up their registers. And it's a long process. It takes us time, but we continue to do it. Where the ones maybe not so inclined to do so, and you can come and do an audit on me and tell me I've got it wrong, and then I'll plead ignorance, they're the ones that get the benefit. So the system, the review is very timely, and the system needs to be adjusted.
Yeah.
Yeah, so, yeah, you go, Councillor.
Yeah, I guess for myself, I'm not comfortable at all, but in this scenario, I'm happy to probably leave it as it is, knowing that we do have a $400,000 altercation to our budget, or alteration, sorry, and probably gives us a little bit more time in the first quarterly review just to adapt and get a feel of what's going on. And yeah, so
Yeah, no, I've just, while we're talking, yeah, thanks, Councillor Jones, I've just been doing some research with the Australian Local Government Association, the ALGA site. So just to put this in context, so the Queensland allocation from the feds in 2021 was 244.2 million. In 21-22, Queensland will get 261.9 million. Now that's now been declared, and ALGA have got that up on their website. So that represents an extra 17.7 million, yep, and to the Queensland from the feds, which is 7%. Now, we got 7,024,000, 7,024 roughly, last year. 7% on that would put us up to 7,529. So, which is about an extra 500,000 if we were to get the 7% rise, if it was applied evenly across the state, but there is no guarantee on that. So I would think that, my view is that perhaps we take a conservative view, we leave it as is, don't count our chickens until they hatch, perhaps. As Mark's indicated, we can always do a first quarter review if they actually decide to give us an increase. Yeah. The review of the FAGs is happening over the course of the next 12 months, 21 in this next financial year, and we've certainly made CEO Mark and I have made representation to the Assistant Minister and to the Deputy Director General of Local Government that we would like to ensure that our council is appropriately consulted, that we have every opportunity to sell our case, to share our case about how it's affected us in terms of our operational costs particularly, to that review committee, so that they can actually look to reset the formula so it doesn't disadvantage councils like ours. And we would hope then that out of that process, we may, it's a big may, see some changes in the 22-23 year if they take that seriously. But again, it's a big unknown.
Mark, I just can't remember for sure, but Somerset and Lockyer, they never, was it the FAGS grants that they were missed out on, or what was that grant? What was the money there that they adjusted?
Works for Queensland. Yeah. No, they were the southeast. They've got their own. They've got their own. Do you want the numbers for those two?
Yes, thanks, Mark. That'd
Yeah.
be great.
Well, the last year, Lockyer got 4.6 million, 4.6, and Somerset got 3.5 in fags. So North gets more because it's dependent. It gets, this is last year's numbers, 11.6, but then over 1/3 of North's budget is fags. So it's very heavily. So council like Cook would be similar. Cook gets 10.5. So like those budgets are very heavily dependent on fags. Gympie, 5.5. So I just don't have the historic in front of me, but that was last year's allocations. Fraser would be interesting.
So through you, Mr. Mayor. So just on what you're saying there, you're saying that North Burton are getting more because they're more dependent. So the fact that we're, we've got, nearly 70 or 80% of our own source revenue, that's actually disadvantaging our ratepayers on the FAGS grant. So that's kind of like, it's not really right, is it, to use that?
That's when I say dependent is they're more dependent through the methodology. The less population, it's actually the own source revenue ratio doesn't come into it. They've got another 1,000 kilometres of road. They're a bigger land area. There's a whole raft of guff that would come into that. Their own source revenue, what it is like that. There's a percent. Badly explained. Sorry. They are they are very heavily dependent on it. I should clarify myself. They're not more dependent, but they are more dependent on the grant. But it wouldn't be their own source revenue percentage that's driving their FAGS allocation. The interesting one is Fraser Coast got 7.9. Now, when you look at Fraser Coast's budget, that's not too bad, and Bundy got 8.4. Now you go work those two out.
Mark, is it, again, this time of year does your head in every time because you're going through so much, but doesn't it come back, we're just a council that is positioned very poorly in as far as we're not small enough to warrant that extra funding, and we're not big enough to fit into that extra category. We're just sitting in that, in the middle of everything, and we're too big to get the extra funding, and we're not big enough to go in and warrant that other thing, which causes us dramas every time we come to a budget and trying to get financial situations, and you're getting your federal grants and all that sort of stuff. It's something that really does affect us badly. We're just in that borderline.
Yeah, Councillor Jones, we are, and I think there's a number of elements in that formula that they use to try and explain how they allocate it, and they look at things like population, as CEO Mark said. They look at cost of delivery of services. So is it more expensive to do business in Mundubba and Gayndah than it is in Kingaroy in terms of materials and et cetera, et cetera. I would hope that we can prosecute an argument over the next 12 months based on economic and social disadvantage, that our region has a very low average income level. We have a large number of people who are either age pensioners or who are unemployed. We have that gives our capacity to raise own source revenue, that limits our capacity to raise own source revenue through rates. And therefore, our region as such, based on its demographic, I would have thought has a strong case. Not so much about the number of people, but it's actually the economic position of that our community is in relative to other council areas. And I think there's a strong case there that we can argue. Whether or not they're prepared to take that on board and factor that into the formula moving forward is yet to be seen.
Through you, Mr Mayor, there's a discussion paper circulated at the moment that's giving all councils the opportunity to comment on the methodology. It's a methodology review, so we're working on that at the moment. It's due to be back Friday the 16th of July, and it does explain the methodologies of the FAGS grants, and it, like I said, it's seeking feedback about what we as recipients of this FAGS grant, how we feel it should be reviewed, or it's given us an opportunity to comment on it anyway. So it's a really important document at the moment that we're
And Susan, will
working
that be
on.
distributed to council, the response for councillors to have a look at before we respond?
Yes, after the CEO?
There'll be a report come to council? Yeah. Yeah, we can actually look at how councillors might be able to add some of the commentary into that from our knowledge of the community. Yeah.
Excellent, Kirst. Been dying to bust that myth. Is that available on the LGMA on the department website, or
It is,
Where can we find it?
councillor, sorry, through you, Mr Mayor, it is councillor, and I can, I'll give you the web page there, and you can download the document and that as well for your own information.
So, Manager, just looking at the state rise, were that to be passed equally, maybe not equitably, but equally, our council would, under those circumstances, go from 7.024 to 7.529. So, in theory, we should get a $500,000 increase in our FAGs next year. It'll be interesting to see whether or not that happens. But it would seem that the conservative position, perhaps the safe position, is to assume that we just don't get the increase and we get the same as we had last year. But again, happy to take guidance from the committee on that.
Through you, Mr Mayor, I just want to support what the CEO said, to compliment the staff and that we have really worked hard to draw back that deficit. So we've now realised in this financial year, with our FAGs alone, we've taken a hit of $580,000 this year. So yeah, I just sort of, like I said, we thought that we'd, draw our deficit back, but this has really impacted on us this financial year. But that's a big slice out of our budget to lose.
Any other questions at this stage before we move into the detailed reports? If not, Selita, we'll go into, sorry, Mr. CEO. Yep.
Sorry. Memorandum, the councillor asked the other day, and so just as Wassett doesn't, what the guys have done as far as the accounting, and I know it'll come up in the rates discussion anyway, but also I knew I had some old historic stuff and we've updated it. So there's 68 properties in total in Memorandum. 12 currently have their, and I'll send it around, but there's such community interest in this all the time from days gone by that it's actually not as bad as, yes, there is an issue there still and we're logging along, but the finance team, rates team do an excellent job of working with the proponents. So I'll run through these. So we've got 12 with rates paid in full. We've got, so out of the 68, so there's 27, so there's 39 that are current rates paid in full and rates and the special charge paid in full because some of them had the option. So there's half of, sweet. So totally good. One is current rate notice outstanding. One's on ad hoc. So 12 rates paid in full. Current rates, one's got current rate notice outstanding, one's got ad hoc payments, 27 rates paid in full, current rates paid in full. Sale of land, we've got a few coming through. Hardship applications lodged, 13. Sale of land awaiting a response from the solicitor, 1. We've got 1 declared bankruptcy. We've got 7 on arrangements that are up to date and 5 paying something but not on an arrangement. So then if you go into the others, you've got properties with R&R for legal action, 6. Final reminder notices issued in April, May this year, 7. Sale of land to be considered, There will be 14 that come through for that consideration as to what we do. So the current charges, including loan interest, was 2.5 million, rounding. Levies, memorandums levied to date is 1.4. Special charges still to be levied is 1 million. And I'll skip the rest of the guff and cut to the chase. So with all the ones that are paid out early and everything, there's an outstanding balance of 493,000. So that could be worse without being glass half full. But yeah, so. So I hope that, and I'll circulate it around
Yep,
council after the meeting, but I hope that answers the question.
Thank you, CEO Marcus.
Just my final question, more probably about process. So this income statement has been put together with the assumption of a 2% general rate increase. But at this stage in time, we're only looking at this one particular budget, and I'm mindful only looking at this one particular budget here in isolation. So if we adopt this budget, are we adopting that 2% general rate increase assumption, or will we model that into the final budget and then look at the whole thing in its entirety? I just probably want to understand that more, because at this point in time, I'm not sure if 2% is the actual right amount or not.
Sorry, I'll let Selena sort of clarify it more. But no, the intended resolution, Councillor, is that we adopt the budget as presented without that 2%. That's to be discussed later on Friday, yes. So did you want to add anything?
That was it. It was just that the resolution that I've put up that Linnell has there was to adopt the finance and corporate, what do I put in there? Finance and corporate operational budget, excluding general rate and related discount and pensioner remission, to be endorsed to be included in the draft 21-22 South Burnett Regional Council budget. So Friday we were going to go through general rates, and Darryl's been doing some work on that. So yeah, it was everything else but those two parts of it that we needed to come back and make final consideration on.
No, excellent. Thank you.
And just further to that, but the numbers we see now have 2% in them. We're not adopting the rates amount, but the bottom line is affected by the 2%.
The 2% only sits in that rates, levies, charges line. So the bottom line, so if you have a look up where the 300,000 is, Linnell, if you go up a little bit higher, there's a 373,198. So that line item, and it's only that line item. So basically we would adopt all the other, we would endorse for the budget all the other line items. However, that one there would be discussed on Friday and finalised once, decided where we're going with it.
It would come back for its own report.
Yeah, we just felt we should present something. That was all. It's up to council to direct us into what you want.
Okay, thank you very much. Okay, well, let's get into some detail before we go to the resolution. Thank you.
Just for your information too, Mr Mayor, because I know you're interested in our borrowings, just further to that memorandum loan, the loan was taken out in 2015 through the QTC, and it's due for repayment on the 16th of September 2024. So it was a nine-year loan. So as at May, the book value was 935,706, I think it is, thousand. We've paid the principal 1.202695, and the interest we've paid is 1,492,306. Sorry, principal and interest. Yep. So, yeah. So sorry, I'm reading it here. It's going over the logo here. I was reading it. Payout. So the market value, if we had to pay it out today, would be 986,120. So around $1 million to pay that loan out.
Thank you. I'll just use your mic there, Councillor Jones.
Yes, I think it's around 3.3%.
Yeah, thank you, General Manager. Okay, so first cab off the rank, information systems. So this is what yours, Manager Anthony. Thank you.
I'll start with the revenue and then I'll hand over to Anthony for the detail in the materials and services. So for the ICT business unit, miscellaneous other sundry income, that item there that we have in actuals was a sale of an asset and is potentially a one-off sale. So we haven't put a budget in for next financial year. For your property rental income communication towers, actuals are at 22,000 and we're only budgeting 15.5 because there'll be a contract liability that's not yet known yet that will come out of that. It'll be about $7,000, give or take. That's why your actuals are higher than your budget. For moving into expenditure, for your depreciation, you'll see that there's a $362,000 increase. However, this is offset by fleet. This is in the income statement where we said that fleet had a reduction. ICT has had an increase. So EB, so we've got the increases that are the EBA as well as the FTE from business systems that's been reallocated. So for employee benefits for ICT and business systems as its own unit, there's only a $28,000 increase because there was a decrease in the business systems. And then we'll get down into the material detail and you can talk through that, Anthony.
Thank you, Selena. Okay, we'll start in relation to the positive at the moment is in the telecommunications. You can see there's a large decrease in that actual line item due to the fact of a fairly extensive exercise conducted by an ICT officer to go through line by line by line and actually remove out services that are no longer needed or discontinued or replaced by NBN. So that's come down through that exercise, quite extensive, took about 6 months. In relation to the mobile phone, that's basically the replacement figure for the fleet of mobile phones throughout our council. The next one is general operations. That's what it takes to maintain IT services in relation to any faults in relation to mice, keyboard, monitors, laptop bags, items along that nature as well. The next one down is in relation to the photocopier costs, exactly what it takes, what the organisation is printing per cents per page. Now there is plenty of opportunity there to actually reduce that figure moving further forward through our T2 improvement project and also some of the actual general progression in the ICT side of things as well. That is a cost that I am more confident that can come down. Moving a little bit more further forward, there's also the IT maintenance, hardware maintenance and general repair. Now that item is in there particularly for the equipment around the place that, like for example, we have a few radio links up at Mount Rowan. If they take a lightning strike in particular, that's actually there to resolve that problem, keep that function and be able to repair that. There can be a little bit of variance in that depending on how many lightning strikes we actually take or the nature of the actual equipment that may fail. And the next one down is the IT licenses. Now, the IT licenses budget has increased quite significant. So a lot of consolidation from a lot of the costs of the other departments out there at the moment, and bringing in the licenses that used to sit within those budgets back to ICT. And there's also a bit of a change in the modelling behind Microsoft at the moment. They moved their actual licensing model to subscription-based. So when we progress through our Office 365 and our Microsoft Teams, this is the actual subscriptions required behind that is where a little bit more of an increase comes from as well. And in relation to the IT software purchases, that's in relation to other software purchases that have come through, like our Sophos or Adobe changes or our PDF readers or the subscription models around that, as well, or VMware or any of the changes required to administer some of our technology. Move down to the internal plant charges for the IT vehicles, and also the next part is the consultants perspective. Now that covers the high-level technical specialised individual stuff out there that my team at the current moment doesn't have the capacity because they're very much a jack of all trades. So when it comes to the specialisation on some of this unique equipment, that's where a fair bit of consulting cost comes from there, and also particularly around our cyber security. Checks how robust some of our existing systems are at the moment. So we can tests like penetration testing and have intrusion detection systems just to see if the measures we have in place are up to standard. And it's good to have that tested every 2 months because of the nature of the industry we work in and the tax and the malicious activity that happens out there. And it moves basically through the materials and services.
Any questions on that at this stage? Councillor Schumacher.
Yes, thank you, Mr. Mayor. Certainly, I'd like to acknowledge the work that's gone into the review of those telephone lines. That's a giant project, but $149,000 saving. That's impressive. Well done. I just wanted to ask just a question in terms of that mobile phone replacement program. And I know it's only proposed 20,000 in the budget, and I can see we've spent 19,692 this year. I just wondered, in terms of mobile phones, how many devices we actually have, and how do we determine who gets a device? Like, is that only for top level management, or because we have compliance officers and things on the ground? I was just trying to understand more around what the service need is for those mobile phones.
No problems. So I think we run about 140, 150 actual mobile phones through the organisation. Those actual allocations to individual staff is based on managers' discretions. And the obviously allocations in relation to if say a plumber drops one in a drain or gardener runs over it with a mower, something on those lines. So that's basically to maintain that the device amount is what we've actually costed for this financial year, depending on how they're treated and the age of them and items like that too. But to answer your primary question, there is basically to a manager's discretion on whether they allocate a phone to the officers, and their role actually requires that to do the duties.
Thank you. And just my other question was just in relation to the IT licenses. And I understand the increase due to the Microsoft subscriptions and things. Just every department as part of this process has brought, at some point in time, there's been some sort of line registering some software or some kind of project. I'm just wondering, bigger picture, certainly over the longer term, I can't see us sustaining these kind of increases in our licensing requirements. So I was just wondering, is there some sort of audit or something we're doing to actually verify what licenses we need, or is this part of the business systems work that you're doing? And is there any potential for savings in that area this coming financial year?
So there's still so it's a work in progress at the moment. So that's what the increase is coming to encapture the ones that we were aware of. It's something that's still working further through to actually consolidate a lot of those actual licenses sitting with the other departments. But as and also to mention, as we move further forward as well, the T2 project also encompasses what we invested in our ERP, our Tech One suite, and whether that actual software application is still needed to be required as the years progress through and as we actually start to delve into those projects a little more extensively.
So the way I see it, we're in a bit of a phase of transition at the moment, but certainly from what I understand, there's enormous opportunity for efficiency, and this is probably going to be the year to really start ironing some of that out. Have I got that kind of right?
Yeah, correct, Councillor. That's exactly right.
Yeah. No further questions from me. I've been through your budget pretty extensively, and I can see we run a very complex operation across different areas, and from what it seems, there's very little opportunity. But besides the work that you're doing, I expect that there'll be more savings presented next year. But for now, there's not much more that I can see we could squeeze out of you. Thank you.
Yes, I'll have to agree. Yeah. Look, I think, as Councillor's saying, business systems, it's the same, isn't it? We really not much else we can do there, Anthony. So, is there anything else that you want, any other information you want to provide at this stage before we wrap up your department?
Not particularly, Mr. Mayor. I did miss a little bit further down, but I'm happy enough to conclude on that if council's happy. So,
Thanks very much, Manager. Okay, well, General Manager, shall we move on to corporate services? Manager Carolyn, thank you.
Through you, Mr Mayor, if you couldn't see anything to cut out of Anthony's, I doubt if you'll see anything in here that Manager Carolyn's really bled out.
Don't tempt me, General Manager. Thank you, Carolyn. Over to you.
Through you, Mr Mayor, thank you. In relation to what you see before you, what we have done is previously we had a decentralised approach to our budgeting where we had sectioned off and had a number of business units. What we've done is consolidated those business units predominantly through our customer service areas. And so if you scroll down further, the only items within those lines at the moment are electricity, which is a fee that really is conditional on us opening the facilities and predominantly reports back to properties or through finance. So in terms of my budget responsibilities, it's not, I guess, as relevant to that potential to review. But I believe Manager Selina has already gone in and made some significant cuts in that space to align it to our current expenditure. So if we go down further to where the business unit 1159 is predominantly where the corporate services budget sits, and that's where we've accumulated all of our fees and charges as well as our expenses. So with regards to fees and charges, predominantly we're a service provider as opposed to an income generator. We do generate fees for something like an RTI application, which will be in the range of $50 per application. And then should there be any other opportunity to recoup costs, we attempt to do that where we can under legislation. Photocopying predominantly is where it's more of an opportunity or opportunistic type of arrangement where someone may come into the office and seek some photocopying done, but there are a number of community services throughout our region that provides either free or very cost-effective photocopying. So we don't intend to generate significant income as a result of providing a photocopying service. With regards to other income, that's predominantly from our Blackbutt office, which runs our Centrelink or Services Australia and QGAP services through that. So those agencies provide Blackbutt commission type of arrangements and onto contract where we provide those as services on their behalf. With regards to the grants, that is REDF, the application that Council makes through to Arts Queensland to provide the REDF grants program. At the moment, community grants are sitting within this 1159, however, through the budget for the first quarter review, the community grants expenses and income will be moved through to General Manager Peter O'May's budget. Moving down further to the expenses, so if we go to donations, that's that community grants program and REDF program, as well as the councillor discretionary funds. And through the workshop, it is determined at this point, there's appetite at this point to leave those figures as they stand as you work through your fine-tuning the budget amounts. However, that's purely at the discretion of council. Moving further forward, we've combined all the salaries, which predominantly is our customer service area and then our administration governance area, but predominantly the salaries are based in our customer service, servicing the 5 customer service centres throughout the region. And if we move down further, the Gen Ops, the area, I guess, where our expenses, you can see that we've got small amounts in there in terms of, with regards to the 3,000, that's licences that may go across to ICT, but at this point that's our Rapid Redax. So when processing our RTI applications, it's a specialised piece of software that we have a number of staff have access to through licensing. The next one down there, the internal audit, there is an increase. I'd probably draw your attention to the $15,000 increase in our internal audit budget. That's purely based on the ability for our external providers to provide our internal audit services. 3 internal audits are on our current program. Once we have the budget brought down, we'll go back to that provider and talk to them about what internal audits they can deliver for that amount. Generally, an internal audit is anything around 15,000 as your base. Like, it just depends on what sort of audit you're getting done, the amount of time that's involved. So that's a fairly conservative budget for 3 audits, but we will work within the budget that council approves. With regards to the membership subscription registrations, that's primarily our industry memberships that through LGAQ, LGMA, WebRock, and then there's a very small amount for Redmond's, which is in the order of, from memory, of $1,000, $2,000. But the majority of the makeup is through LGAQ, LGMA and WebRock. With our postage area, you'll see that our year-to-date actuals are around 30,000 less than actual budgeted for the postal stationery costs. However, Manager Finance is doing some work behind the scenes and consolidating all the postage that's across the organisation. So what you see before you is not the massive mail outs that Council does for a number of different activities like rates, etc. However, that's going to be consolidated through, and it's a fairly conservative budget as it is. We'll go close to the wind on that, just purely of the amount of postage that we undertake. Stationery, I think it's fairly self-explanatory, and the staff amenities has been significantly cut. We've managed to make some savings where we can. And if you scroll down one little bit more, we've got the internal plant. So that internal plant amount, we did have a vehicle that was assigned to customer service, which we returned to the pool. So we didn't have the full costs of that vehicle. Those costs we have tried where possible to accommodate our roster to limit the amount of travel that we had to put on our staff. And sometimes the staff take every efforts to take their own vehicles, even though they are eligible to claim or to acquire a council vehicle. So Manager Selina has already gone in there and taken some of the savings that we've managed to, so we've got a significant reduction in that budget, so we'll try and manage that as well.
Thank you, Manager. Councillors, any questions?
through
I
you,
just
Mr.
can't
Mayor.
see your light, Councillor
Oh,
Duff. Can you?
sorry.
Yeah, thank you. Councillor Duff.
Through you, Mr. Mayor. Just on, we did mention it in the workshop, but I just think it's worth mentioning here that with regards to the charges, like the cost of actually the stationery and printing and all that, we're looking at trying to get more and more people to email. Will go on so that we can email the rates notices and things like that. Because I notice a lot of businesses now are doing that. They're asking to put your email address rather than getting the notices in the mail, because everyone, like, if we're going to run a tighter ship, that's something we really need to look at, because those figures are huge. So if we could make savings in those areas, I think we certainly need to go down that path.
I believe that's a work in progress, General Manager, isn't it, that we'll be working through that process, because we have to get consent from people to receive. So there's a number of, I think there's 80-odd thousand rateable properties, so that's a fair body of work, but I understand that you are working, or will be working through that process.
That's a work in progress, Mr Mayor, yes. And I agree with you, Councillor. There's opportunities for huge savings there, like they're obscene, some of those figures.
Councillor Shoemaker.
Yeah, thank you, Mr. Mayor. Just want to acknowledge and thank Carolyn and Selina for the work they've done here. Like, when you go through it, you really have cut everything that you can cut. And I have looked at things like catering and staff amenities and things, thinking maybe there's a little bit there, but it really doesn't look like it to me. And yeah, just like to acknowledge the work that's gone into this to try to find those savings. And no, there's certainly more work to be done, but thank you.
Thank you. Other councillors? Before we move on to finance? No? Okay. You're done. Thank you, Manager. Okay, Manager of Finance, over to you.
Through you, Mr. Mayor. So the first business unit we have is the finance business unit. These internal finance charges are made up of our admin recoupments and special dividends. The $452,000 decrease is due to not taking dividends in water, wastewater and waste. So again, this will be reviewed throughout the year and in the next year when we do the rating models, but that's where we're sitting at the moment. Plant and fleet hasn't been finalised yet. At the moment, it has a $500,000 proposed dividend, but that one hasn't been set yet. For your fees and charges, your certificate rates, that's we've had a massive influx of rate searches this financial year. Hence, we had 130,000 as our budget and ended up at 276 to date. Next year, we proposed the 160,000, and that's based on a 3-year average. If in the first or throughout the year we see an increase in rate searches, we'll adjust accordingly. The commission is your state fire, which is on your rates. So for your interest received, the interest on interest rates is your interest on overdue rates. We've got 160,000 estimated for next financial year. May or may not be a little bit more than that. However, they have just announced the interest rate, which had a slight decrease, so we left it at the 160,000. Your interest on investments, that's the adjusted budget that we did in first quarter, and we've left that as it is to be reviewed throughout the year. Where am I up to? Legal fees recovery. Okay, so this is your debt collection, and it's a nil bottom line effect to council. So although we've reduced it to 80,000 there, we've also put in an $80,000 expenditure budget. Rates, levy charges. This part will be discussed Friday. That's just the assumptions that were put into this model. Your memorandum won't change. That will still have to go through as is. It'll just be what you want to do with your that general rates revenue line. And then you have your community rescue and evacuation levy. So I think currently that's at the $5 in our revenue statement. So I guess now's probably a good time to ask whether you want, if that's what you're thinking that you want to go ahead with in the next financial year, or you'd like to increase it $1.
Okay, over to council on that question while we've got it in front of us. The emergency levy, is it?
The rescue
Rescue.
helicopter levy. I think it went from $4 to $5 last year. It sat at $4 for quite a few years. And I guess throwing it open to what, at the moment, I've done the meeting report up ready for your budget meeting, but yeah, whether or not we keep it at the $5 or you want to add $1 to it.
So, Manager, if we were to increase it from 5 to 6, that's $1 per rateable property per year, right? Do we know how much additional revenue that would give us approximately?
We don't get additional revenue. Yeah,
I mean,
we
how much
paid
we?
out.
Yeah,
Yeah,
sorry.
sorry.
You know what I mean?
Yeah.
How much would we be able to send on extra?
So currently we have, I think it was 84. So yeah, you'd be up around your 100,000 that we would be sending off as a donation.
Increase it from 84 to 100 if we were to put an extra $1 in. Okay, so over to committee councillors. What are your thoughts, Councillor Potter?
Yeah, Mr. Mayor, I actually, I know we increased it last year. It wouldn't bother me too much to increase it this year, but I would like to see an overall amount of what all a person's rates are going to be. So we're putting up water, we're putting up, waste. I would just like to see what the difference is going to be in a full rates notice for a person, because look, I know it might only be $1 here and $1 there, and believe me, I realise how many times the helicopters come into Kingaroy. You only have to listen. They're nearly here every bloody day. They do over 300 rescues 300 in the town a year. So just on that alone, it's pretty incredible what they do. and it's over $15,000 for each helicopter that comes in. So, I mean, we're not even paying for ourselves, and they're only 60%, I think, government funded. So, look, I would really like to increase it, but I do want to see what the overall.
Thank you, Councillor. Mr. CEO, the helicopter would also come into, does it come into Mergen and the Nango?
It,
The whole
it
region?
covers the whole region.
Right.
Mayor, we can leave it as it is today. I mean, we've still got to talk about rates and so we're going to come back. So, I mean, like for that, it gets its own report. For the adjustment, I think, Selena, without putting you colours under more work for the adjustment, if we added $1 to it going forward, so we could leave it as it is today, and then when we deal with the rates and people see, there's certainly the opportunity for that one to pop it up as we go through the rest of this week.
Thank you, Mr. CEO. Any further comments from councillors? Manager?
Just going to add that it wouldn't really matter whether we, like, what we were going to do with it, because you've got an in and an out. So even if we had that budget, it'd just be an adjustment in and out in first quarter. So just something to think about.
So as Councillor Potter's saying, yeah, it's what you're saying. It's really about how much do we want to send off. Yeah, well, we won't know that until we see what the actual increase bottom line is to the ratepayers on average. That's your thinking, Councillor Potter. Wait to see that first. Do other councillors feel the same? Hold that off until we see that. That's the general feeling. Yep. Councillor Schumacher.
I'm probably just mindful, like, of some of those facts around what Councillor Potter's talked about in terms of how often that helicopter actually does come into the region. And I guess I'm also thinking about how generous our region already is when it comes to fundraising activities for Life Flight and RSEQ. And so, yeah, I'm probably comfortable with looking at the bigger picture before we make a decision on that. But I would like to bed down some of those facts so we understood what the actual cost was to deliver that service, and how we are contributing through this, how that sort of weighs up in the bigger picture. So that's my thinking at this point in time. I agree, though. I think we've got to see the whole picture.
Yeah, Mr. Mayor, just putting it into perspective, $1 is 2 cents a week. The helicopter flies into this South Burnett region 375 times, I think the last figure I was given, at $15,000 a cost. So I know that Councillor Schumacher and Maidenwell's a significant contributor to the Life Flight every year when they have a function up there, but I think this region is way, way, way underfunding what we take out of that service. I don't think $1 is too much. That's just me. You work it out 375 times 15,000, and you work out we might raise $500,000 in the community a year, but I think it's way under what we utilise. And I think people, you know, and look, I totally hear what Councillor Potter and Councillor Schumacher are saying. The the rates will be significantly changed this year with other aspects of what we've done, but I think $1 for the community, 16.5, you know, it's 2 cents a week, 2 cents a week. You know, so I'm happy to wait. I really am, but I'll be fully supportive. I'll be supporting $1 increase on that one.
Yeah, I support what everyone says. Happy to wait, but I'll probably be at this stage thinking I'll vote for that, for the $1 extra to give that extra 16,000 to Life Flight, considering it services 33,000 people out here. Yeah, so all right, no, that sounds good. Thanks everyone. Did you want to keep going then? Thanks,
Yep,
Manager.
certainly. So the next item we have is your operational grants, which is the federal assistance grants that sits in finance. You can see the 170,000 decrease that was taken out in your first quarter revision. We haven't reflected, or we don't know yet what next year is going to be. So again, that can be updated once that information is available. For your depreciation, this is a right of use asset, so it's as a result of the new accounting standard for leases. That's best estimate at this point at what that's going to be. That changes throughout the year whenever we get new invoices and such. So, but it won't change materially. Your donations, rating relief, that's all your remissions. So I think there's another, that may go up depending on the standing committee next Wednesday, because I think there's a report coming through I noticed the other day for another group to join the remission. So, we may have to increase that by about 10 grand. Donations, actually had the outgoing of your community helicopter rescue. So your employee benefits, the main changes here is that there's an EBA increase, and you also had an additional FTE that was sitting in corporate that was redesigned and put back into finance. Let's keep scrolling. Finance costs haven't materially changed much. They're just based on the historical. We just kept track to see how they were trending. The materials. Okay, so the first item, consumables, is for the bottled water. Audit services is driven by QAO. That's your KPMG external audit visit. Your valuation fees are from DNRME. Your actuals are down because you don't receive those invoices until July. It must be within the first 2 weeks of July because they're accrued back. So you won't see that till after 30 June. Come in on there. We consolidated the council rates to finance last financial year, and there's been an increase, and that's what that 73,000 is. Electricity, again, once that review's done, we'll be looking to consolidate electricity back to one department. Properties is currently setting up tasks to have all of this put on the asset, and we may as well utilise the work that they've done with that rather than recreating a whole lot of other tasks. Advertising, sale of rate and arrears. So this year there was no actuals because we haven't got to that part of the process. However, next year it will happen, and you've actually got a fourth quarter revision come through for that to take it out of 2021. The legal is debt collecting legal, not the legal that sits in corporate. And that's the offsetting 80,000 to your revenue of 80,000. General operations, we kept the budget the same even though your actuals are up because there was a one-off fee for the admin recruitment model, which we're not expecting the next financial year. Your agency collection fees, which would be Australia Post, again, the budget's driven by how it's been tracking. We have more people paying through Australia Post, BPay, than we do having those fortnightly $20 direct debits. So we're seeing an increase in bank fees because of that. However, you've freed up half a position to do debt collection, which you didn't previously have. So I think that we're still better off with how it's gone. The posting, printing and stationery, I culled because Carolyn can pay for it. Stationery, look, stationery just depends on demand. We got Jim Freight catering. So that divisional barbecue number for the 200 should actually be the line above. And then travel. So some of that's if, like I think Kerry has a, what has she got? She's got an FBT, end of year, financial year seminar workshop coming up. There'll be FBT workshops, and that's the travel for them to go and attend these ones. Tropical, yep. Internal plant charges, again, we reduced the budget. That's pool use only. I have a suspicion that it was up high originally because the previous general manager finance, his allocation went there. But yeah, anyway, we've culled it. For your consultants, there's the 30,000 in for a rating review to continue on with the general rating, and that was around the bringing the cents and the dollars closer together, and also to try and get our categories to be the same. And I think we were talking about utilities too and how we were going to do them. And finally, you have your discount and pension remission, which is driven by what you decide will be general rate. So that will be adjusted when we know where we're going with that.
Thank you, Manager. Questions? Councillor Schumacher.
Just one. I love how thorough you've been with your budget, Selena. Thank you. Just with the finance costs, I note the year-to-date actuals here for finance costs, so bank fees and charges, FBOS fees, interest on loans, QTC admin fees, and 0 for expected credit loss, is tracking at 134. And then our proposed budget this year, I can see there's that 0 for expected credit loss in our actual year-to-date actuals, but then we're budgeting for it this next year, and it was in our original budget. Can you just explain that to me? Like, is there opportunity maybe to take that 30,000 out of there?
No. It's an end of financial year adjustment. So at 30 June or after 30 June, we actually go through and work out how much we have in our, so in all your P&R modules. So all of our debt that's owing to council, we go through, work all of that out. And then we have to, there was a new accounting standard that come in last financial year that says that you can't work out what your doubtful debts is based on historical. You actually have to look forward as well. So even if you have historically always collected 100% of your debts, the new accounting standard says that there's a risk that you're not going to do that, and we have to forward look at that. So until that is done after 30 June as part of our financial statements, we don't know what that is. That could be a lot more, or it could be nothing. So the better we get at our debt collection, the less that there will be there. I think the very first year it was like 150 or something, like it was huge. So yeah, yep. So that's there as we have no idea, but we probably need something.
Thank you.
Thank you. Just manage finance costs, bank fees and charges and interest on loans, QTC admin fees. Just looking at that year to date in comparison to the budget, that 174, has that been actually, have we actually sat down and done a forward calculation over the next 12 months on that specifically, based on what we know our level of debt and our fees are going to be on that?
No, a lot of those, so your bank fees and charges, a lot of them are driven, like your FPOS is driven by how many people come in over the counter and pay by FPOS. Your bank fees and charges will be on your actual bank account. And that's been driven, so at the time that the budget was done, I would have extrapolated out however many months by how long we had to go and decided whether or not we were going to come in within budget. And then I re-ran the actuals on Monday before our workshop. So those actuals would have adjusted from the time that we first did that budget.
Yes, and they look quite consistent anyway, don't they? Just moving on to valuation fees then, can you just explain for the benefit of the committee why we have a $180,000 expense to our council for valuers? Who do we pay and why do we pay them?
You can have this. No. This will be DNR. I know it's DNRME, and it's to do with the valuations of the property. So they go out and value everyone's properties, and that's what's put into our rating system. And we don't have a choice. We have to pay it. They set the fee.
So we're expecting that the State Government Department of Natural Resources is going to charge our council $180,000
That's correct, Mr.
to
Mayor.
value the properties upon which they hold the titles,
Correct.
of which they register the titles. And why do we pay for that? What benefit does this council or our ratepayers get for that service?
All I can say, Mr. Mayor, the process is that we receive those valuations, which we do pay for, and then our rates officers input those valuations, the new valuations, into our rating system and re-rate the lots based on those valuations.
So effectively, we're paying a fee to get access to the data.
Yes, that's basically. And I do, and correct me if I'm wrong, Mr. CEO, but I think that we do have the option to have it valued. We have the option to say yes or no annually, don't we?
You are correct, and I'm just smiling because she's money for jam, just saying. But anyway, that's a total Marxism, not a. But the department goes through its considerations every year, and it's like a precept. We pay it whether they do a valuation or not. During the year, you have like the independents, like the sale properties amalgamation. So there are services offered through the year. Yes, we get asked each year in regards to whether we want a valuation or not. Well, we're offered to give our opinion. Generally, the question is, we're thinking of not doing a valuation this year. What's your thoughts on it? Councils, we like a lot of councils, or councils tend to not to want a valuation every year because it just throws your rating out the window every time they do it. So the 3 years, so it tends to run, if it's good, in a 3-year cycle. Where it gets messy is where we were 3 years ago, and Selena, I'll be correct if I'm wrong, they waited that 5 years sits in the back of my head for some reason, but it may not have been, but they waited past the 3, and then the adjustments are just massive. So you pay you pay it, whether there's when they give the advice as to when ask our opinion, do we want them, they will come back and say there's not been a lot of movement in the market this year. It's our valued opinion that there is no value in the reval. And if they do the reval, we're obliged to use their numbers. So sometimes it's best not to have one every year because it just throws your rates way out of whack.
If we were to say we're not going to have one this next year, that'd come out of the budget in a future revision.
No, it's like a
annual?
precept. It's like an annual fee.
Oh, it's an annual instalment.
Yeah. So like we pay an annual. Oh, I think it's still in there. We pay an annual fee for the privilege of the Electoral Commission to run our elections. So you have a yearly fee to maintain the secretariat and the capacity for the Queensland Electoral Commission to run the elections, and then you pay the election fee in the election year. So these sorts of hence my money for jam, which is very uncharitable, but it's you pay it. Now, if they decide they're going to do a valuation, they'll ask our opinion, and we say yes, no. Once they decide they're going to do it, they're generally pretty good, but they will, if they want to do one, they will do one.
Right. Do we know what we would have received an account in July 20? Do we know what that account, what that creditor, what that invoice was for? How much?
172,489 was in the 1920.
How much, sorry, Selena?
172,489. Our 1718 has 169,532.
170, 172, 169. Yep, okay.
So it's been slightly increasing, and the 1819 is 407,000. But I did go and look that up. It's not all. I'd have to go find it. It's not all DNRME. There was something else that happened in that year with valuations. That was when finance had asset revaluations as part of finance and not infrastructure. So that's why that's showing as 407,000. Because I did go looking at why the trend had changed. Yep.
Right. Well, there's a lot of fingers that get into our honey pot. Are there not? Councillor Duff, you're going to have to put that up because I can't see it, sorry, otherwise you won't get a chance to talk. Okay, Councillor Duff, thank you.
Just on the insurance, I know that you've said it's to be reviewed once new premiums are known, and then you've already made a cut there. But I just know that from when different like sporting clubs, different groups ask whether something's insured, it's sort of, we always have to go back and see whether that's covered or that's not covered. Is there like if we did a full review of all of our assets and what's covered and what's not covered, do you think that there's an opportunity there to make some significant savings or to
It's your pet project.
Yeah. We have conducted that review, Councillor. That's part of this budget. All of the components of our insurance were reviewed with a view to lining them up with our asset registers, and look, there was very, very little variance in there. I was fearful that we would have assets insured that we had sold or whatever, but no, the review didn't show that. We also had plant and fleet reviewed with the view of having maybe we have a $500 excess, for example, for our white fleet, by increasing that to $1,500 to maybe drop that premium a bit. But there was, sorry? No, look, there was disappointingly, there was very little savings there. I really did. I had my hat there. I really thought we'd save a lot of money, but no.
Be more about taking assets off.
Yes, and that's a separate review. That's stage 2, where council's interested in looking at your assets as there. So that's another conversation. But as far as what we've got right now, no, unfortunately.
Thank you, General Manager. Other questions on finance? Okay. We'll move on to procurement. Thank you, Manager.
This is our stores business unit. So the change in the employee benefits for this business unit was there was a trainee that was made permanent, and there's an EBA in that that section. You can scroll to materials. So look, there's not much. I guess materials. The stock adjustments is probably the most significant in there. And as we discussed in the workshop, we've just recently written off 32,000 in the landscape of change books. 20,000's been proposed for next year, more so because I know that's about what our stationery is, and our procurement officer is actually looking at a better way to issue stationery than what we currently have. The general operations was reduced because there was a one-off implementation fee in there for Tenderlink, so we dropped that out. General freight fluctuates, and I guess, look, that business unit has been told they're on rations and they're not to spend unless they get approval because there's no money there. And plant charges, one by commuter use, and that's the van that travels around. Yep. And then we just have the first stage of the centralised procurement and what that's really the scoping out and the plan on how it's going to look and how we're going to approach it. And a bit, maybe there's a fair bit of change management in centralising the procurement and the whole process. It's a massive process. And that's all I have for stores.
Thank you, Manager. Questions? Councillor Duff.
Just wondering on that centralised procurement, because you're not sure whether you're going to need that consultant or not. Is it possible that we could drop that out and then come back with a quarterly review if you actually find that you need the consultant?
I just don't know the value.
Yes,
we just don't know the value. Haven't started the planning and the scoping to work out, and that's where I guess we were looking at using the consultant, because it's not just saying to the whole department, like to the whole organisation, we're centralising, give us all your stuff. We need to go through and actually work out, right, how many resources do we need to be able to do that? How much are you going to save from your supervisors now not having to type your purchase orders up? There's a whole heap of change management. How should we roll it out? We're looking at doing a staged approach. So we say to one department, let's choose an easier department to do to iron out any wrinkles that there is in that area before we go and hit someone like, say, water and sewage, who, there's a fair bit to it. Look,
Councillor,
we'll work with what you.
Yeah, look, I would be reluctant to pull that, Councillor, because with the centralised procurement, you've got a whole governance framework that has to be established around that, because that's high risk to council as far as reputation, risk for fraud. So I would be very, very reluctant, and I would be thinking that consultant would be used virtually with existing staff to establish that framework. There's a lot of, as far as financial delegations, it's a beast in itself, and it's got to be done properly. If it's to set it up properly, you've got to have a solid foundation, and I think honestly that would be money well spent. I really do.
And you don't get
Thank
money
you.
for $30,000.
Yeah.
Thank you.
Councillor Schumacher.
Thank you, Mr. Mayor. I just wanted to check. The word stationery, postage and printing has come up quite a bit, and I can see that every area has quite a conservative budget. But I am mindful of our real digital approach. I'm just wondering, is there any opportunity, like you mentioned that procurement, I'm probably just curious, like you mentioned that procurement are looking at a different system. So does procurement order all of the stationery, and then does corporate services pay them to do that, or are they different buckets?
That budget's been removed.
Okay, so can we just confirm what we've got? So we've got in the corporate services expenses budget, we've got 92,500 for whole of SBRC postage and some stationery. We've got 18,000 for general stationery, and then I've got 2,000 in the general finances expenses for stationery. And then there's the procurement bucket too. So does everybody order their own stationery?
Yes, everybody currently orders their own stationery. So the posting, printing, stationery line should be renamed to postage. Although some people, because it has stationery in there, pick up that natural account, because even though there's one that says stationery, they pick up the posting, printing and stationery. So it's part of the cleanup of those natural accounts to make it a bit clearer. But yes, everyone organises their own stationery, and the procurement one was removed. The procurement, postage, printing, stationery was removed, knowing that I was going to use Carolyn's money.
Okay. Sorry, Carolyn.
And just
Thank
so
you.
Mr Mayor, just in terms of the stationery, when we say each other order their own, it's purely like location based. So Kingaroy customer service have a locked cupboard where, you know, stationery can be acquired through an access to a key, similarly with Nanango, so that it's compartmentised rather than individuals ordering their own stationery. It's ordered in bulk to make savings, and then we order that through stores and then have it at in a repository that's locked. Yeah.
Thank you. Appreciate the work that's going into that. I think there's, you know, the world is changing, and there's a lot of rulers and rubbers and things in some of that. So, yeah.
But you are correct, councillor, that there are huge savings to be made there. And part of the business systems, and I know we're putting a lot on this, but that's also reviewing our practices. And part of those practices, for example, is that people may go and photocopy an invoice or something and attach it here, or do, you know, that can all be done electronically. So once we start mapping those processes and that, hopefully we will be transitioning to a paperless office or, you know, council, we hope, and there's huge savings to be made out of that.
Manager, just in terms of that stock adjustment account, you just did start to explain that. $20,000 there. Can you just explain that again
Yep.
for our benefit? Thank you.
Yep. So that's our end of year write-off. So if there's, so when they do their stock take at the end of year, that's where, if there's any discrepancies, that's where it goes to. The reason it's at 32,000 at the moment is because we had the landscape of change books written off. They were purchased, I believe, in 2014, maybe prior to that. There's 3 pallets of them sitting down there. And the reasoning for writing them off is because I heard through the grapevine that we were giving them out at citizenship ceremonies, and because the inventory has to be held at cost, lower of cost and net realisable value, I figured we could no longer keep it on our inventory. So although we still have the books and we have the 3 pallets, we can't show it on our inventory. So that's what that is. Every year we have a $20,000 budget. You don't know throughout the year what that's going to be. I had spoken to the procurement officer. She did indicate that there was a heap of stationery down there at the moment that she wanted to write off and allocate out to all the different officers, because she wanted to implement a new process whereby we order them online direct rather than the stores maintaining it, because it's a lot of work for the officers to stock take them, and yeah, the cost involved in it, we would be better off ordering it through one of those. I know there's a few stationery places you can order offline and they deliver. Yep, so that was why we ended up saying, because I did say to her, what do you think? Looking in crystal ball, what do you reckon you're going to write off next year? But she said there's at least 20,000 in stationery, so I went, oh, I'll leave the 20.
Thank
And
you,
again,
Manager.
if it doesn't get used, it doesn't get used. It just gets given back.
Okay, if there's no further questions, I think we're ready to go to the motion the recommendation.
So just clarifying, Mayor, so did I just hear Selena say she's buying books off me? So that'll be a $30,000 transfer. Thank you.
I'm thinking.
You're more than welcome to the books.
I'm thinking that I was getting robbed because I was copying the charge for how many? You got 1 charge, I got 5 charge.
No, they're actually they're very, for those who, if you haven't read them, they're a beautiful book and they're a terrific gift. Certainly the trees down the track, but it's going to take us a little while to get through them through the citizenships. Yeah.
Thanks, Mr. CEO. Okay, it's recommended that this committee recommends to council that the finance and corporate operational budget, excluding general rates and related discount and pensioner remission, be endorsed to be included in the draft 21-22 South Burnett Regional Council budget. Do we have a mover? Thank you, Councillor Schumacher. Seconder, Councillor Duff. Thank you. Okay, speakers for or against? If not, those in favour? Carried unanimously.
And Mayor, I've made a note on mine, and Lynelle will catch up, but I've just got from before, if I've got the intent right, resolve to revisit the 2 lines, income rates, community rescue and evacuations, levy and expenditure donations, community helicopter, in line with revenue and rates discussions.
Thank you, Mr. CEO. Are we ready to move on to fleet? Okay, we'll progress to fleet.
Thank you, Mr. Mayor. We'll get Lee here to go through the operational budget. It's was discussed, sorry, in my absence on Monday there. So I'll just get Lee to take you through his budget, and we'll just request any questions at the end. And if we get through in time, as the CEO has alluded to, hopefully we'll get through our the capital budget as well. So it's over to you, Lee. Thank you. I'll just get Manager Selena to go through the revenue part for you, Lee, and then you can speak to the expenditure.
I'll start if that's okay. This is the plant and fleet operational budget for 21-22. So the first item we have is the on-cost recoveries for small plant. That's been increased in line with how we were actually tracking. Again, the 21-22 budget was completed a couple of weeks ago. However, I reran the actuals on Monday so that they were current. I have asked one of the finance officers to double check the on-cost recoveries small plant and how it's tracking. So I'm happy to leave it at the 180 until that review's done. The internal plant charges, this is the credit that comes back in from all the other business units where we charge them. This is the recoveries for it. Again, this will change depending on where everybody lands with their plant costs when we start looking at utes and who's going to have what. Last time I checked, I'd left it at that value because the last time I checked the ledger, we didn't have a material change. Even though we've been dropping some of the plant items out, we hadn't had a material change in the debit side. So I was happy to leave the recoveries like that at this stage. Your sundry sales, other, that was scrap sales, and the 2021 year was a higher year than any of the previous other years, so I've left it at the $1,000. The fuel and diesel rebate scheme is your fuel tax credit. Now, that hasn't tracked as high as we had originally anticipated. Again, we had done an audit, an external audit with KPMG to go through and review our fuel tax credit. That was a couple of years ago. Now, there was discussion at that time that we would have them continue to do that on a monthly basis, because even though we made, word this correct, even though we made the 700,000 surplus in it, because we had to do a refund, there was some nervousness about getting them to keep using that algorithm going forward. So because of that, we've done it in-house. And what I would recommend is in another couple of years, we go back through that process again, and anything that we haven't claimed that we could have claimed, we pick up in that review. And that way we're using their software and their tools and their help to talk to the ATO, because if we claim what they're claiming, we don't have the expertise in-house to do an FPT or like an audit on it. So we've left that down at what we know we can claim. So depreciation, you've had a decrease in your depreciation, and this is because the plant and fleet and the ICT business units have been split. So now, so you've got a decrease there and an increase in ICT. Your employee benefits for this business unit, the changes here is the EBA increase. We've currently unfunded one mechanic position to be reviewed when the plant and fleet and the structure is all done at the same time. It's also assuming a 14% capitalisation. So again, they're just the assumptions that's been put into those employee benefits. Internal finance charges. So the admin recoupments was the model that we workshopped, and where Plant and Fleet were paying 1.8 million for admin recoupments. It's now been reduced down to the 619,000. However, their dividend was 350 last year, and we've increased that to 500,000 this year. So, Lee, did you want to talk through your materials? If you want to go through your lines with what you bought and why you've bought it, with the material side?
If everyone wants to hear the line by line of the budget, yep. You'll see on most of these, I've got an explanation alongside each one. There's the materials, the stock requisitions that I purchased, not purchased, but I just got through the store system. Then it just goes down to drilled rivets, MIG wire, consumables, which is basically anything we use in the workshops as far as grinding discs, fan wheels, dies, cut-off wheels, shackles, bolts. Security items as padlocks we use on a lot of the plant that we use, and different items around the workshops. Loose plant, that's sledgehammers, spanners, tooling that's outside of what's expected of the tradesman to supply, which is purchased, but then that is held as a workshop item. Masking tape, paints, and that's all part of repairing, maintaining and looking after the stuff. There's a few of these to be looked at after the fleet review's all over.
Yeah, see, I'll just interrupt there, Lee. You'll see, like, your fuel costs, your maintenance, your vehicle registration parts, you'll see there to be reevaluated again once the vehicle review is complete. So they will be decreased, obviously. If we don't have that number of plant there, we won't be incurring those costs either. But also just be cautious, we won't be then recouping what we booked them out for either, that revenue. So it normally, I think it's around about, on average, around about 15,000 a year for maintenance for each vehicle, and we normally recoup about 35,000. So we net out about 20,000 per vehicle.
I understand, General Manager, but it is an internal book entry. We'll come to that later. Thank you.
the maintenance costs on a lot of these vehicles now is actually starting to creep up, as we discussed previously about the age of some of the fleet, and the maintenance has increased accordingly for that. Going down the bottom there, we've got subscriptions, and that with its industry standards, the IPWEA, and which is a local government body Australia-wide that sets a lot of the standards at which we calculate our hire rates, and tooling that we use for calculating out all the life costings and that. Small plant purchases, that's to replace all small plant that is non-commissioned plant. The budget was actually set at $50,000 earlier in the year. As you'll see there, we've only spent just under $12,000, which was a shortfall in the way we were informed to purchase plant at one stage was to have each individual department supply an OP number, as there was no money in that budget to purchase a small plant, which we proceeded to do up until a couple of months ago when we found out there was money in that budget, and we have started purchasing plant again through the small plant budget. Next page, chemicals. This is all the chemicals we use for cleaning the parts, washing the vehicles, a lot of acids for cleaning down alloy and that, and washing vehicle detergents. The general maintenance, that's looking after some of the larger generators and treatment plants that don't necessarily have plant numbers that we book straight to. And that's just general maintenance that we do on them. The internal plant charges for the plant and fleet side of things consists of 6 commuter use vehicles, which are also 4 of them are breakdown vehicles that are equipped to serve as breakdown units throughout the council for all the plant. We have 1 fabrication truck that is used to go to locations like sewage treatment plants, sale yards, carries a welder and pressure cleaners and that for doing any work there. We've got 1 forklift that's used in the workshop. We've got a fuel truck that services all of the mobile plant throughout the council area on a daily basis. And the float, that's used to actually move all of the yellow plant that can't be moved by driving. It's not economical to transport it. So we have the float that we use at the moment. What's not on there that we do also have that comes into these figures is we've got 3 water tankers that go behind the prime mover that we were utilising, especially during the dry periods, that we were taking these water tankers out onto the job sites, leaving them there, rather than the operators having to drive a lot of kilometres for water. That actually decant the water out of the tankers and allow them to keep working. The use of them has not been as high since the rain started, but they have actually saved a lot of time and allowed the teams to keep working. So. The fleet review, that's been done at the moment, and we're awaiting a final outcome on that. The contractor work down the bottom, that's for people that do specific tasks that the workshops aren't tooled up to do, like making the hydraulic hoses that we don't do. We engage all of the local auto electricians around town because council, we do not employ an auto electrician, and we aren't tooled up to even, for us to employ an auto electrician, it would take considerable cost to tool up to be able to do it, and it's been deemed it's more economical to just use the local suppliers.
Thank you, Manager. Okay, who hasn't got a flashing light? Councillor Duff.
Thank you, Mr. Mayor. I just think I know that as far as the review of the fleet, and we're going to see where that lands, but I just think for the purpose of our budget, that we could take $250,000 out of the fuel costs, because if you look at the year-to-date actuals, it's 943 million and 85, and we're up to 1.24. So I just think that that's an opportunity to just take out $250,000. So that's what I'm just.
Yeah, thank you,
putting it
Councillor.
out
So
there.
just clarify, if there's anyone watching on that out there, it's not 943 million we spend on fuel. Council spent year to date, we have spent $943,000 on fuel. Please don't report that in the paper, media, if you're watching. Okay. Thank you, Councillor. That's noted. Any response to that, Manager? Thank you.
I think the only thing we want to be aware of is the price movement of fuel. This is reduced significantly because of the COVID. The price of fuel has dropped. I'd expect, and I think most people expect, to see the prices start to go up as everything starts to open up, as vaccinations take off and the economy starts to move, and I think we will see an increase in fuel. Whether it goes back to what our previous years have been, that's just a wait and see game.
Councillor Potter.
Yeah, thank you, Mr. Mayor. With regards to the fuel, I'd like to that to be reevaluated once the vehicle review is done as well, because if there's less vehicles in the fleet, obviously less fuel. But I'd also like to know how much overall do we pay in the fringe benefits tax? How much council pays in that area? How much
No, I
it's
note you had a
costing council?
budget of 30,000, I think, Manager in FBT and Finance, did you not?
I would have to clarify, but I believe it was 18,000 that was this financial year's return. It was about 18,000, but I just have to go back and have a look at the actuals on that.
Yeah, I'm sure I saw 30,000 in your budget, Slender, for
Yeah.
FBT.
Yeah, it may. I'm just talking about what we've just done now, just recently for the actuals. I think it was about 18,000. Has it
Right.
got that in? Yeah.
Thank you. Councillor Henson.
Thank you, Mr. Mayor. Yeah, just 2 points. And on the fuel costs, I can certainly appreciate COVID. We were paying $1.15 and we're back up to $1.36, and it's still rising every week. So that's a dangerous one. We'll be back at $1.55 when transport and things start to open up again. That being said, I think in the council's fleet, with the purchase of modern equipment, we certainly can look at fuel-efficient machinery to what it was 10 years, and our life of machinery is 10 years, and being experienced in machinery, 10-year-old and older machinery to new machinery, the fuel efficiency is greater today than it was back 10 years ago, but that's certainly a dangerous one, fuel costs, and I'd love to say, yeah, but I just don't know how you could slash 250,000 off that, or you'll have everything just sitting in the shed. Just another note, I noticed 2 lines of consumables. One's grinding discs and all that, and then several lines later you've got O-rings as consumables. What's the difference there?
The O-rings are just a consumable that's used for hydraulic hoses. Most hydraulic hoses now are all flat-based flange that has an O-ring in them, and once you have them apart, they're all replaced. And even though they don't sound much, you've got to buy them in hydraulic kits, and they get quite expensive over a period of time. The 2 sets of consumables you'll see there is these figures are for both the fabrication side and the mechanical side of the Kingaroy workshop. They both book their consumables to different numbers so that we can monitor the costings of each side of the department.
I think the other part of that too is anything that has materials in front of it comes from a stores. So that's actually been a stock requisition. Yeah.
Councillor Duff.
Just on the contractors and consultants, and I note that you've got the hydraulic hose contractors, but it appears by the figure that you've come up with, the 43, that you've actually added the consultants to that to get that 43. I'm just wondering if we're not going to have a consultant, why we would need to have the extra money for the contractor to do the hydraulic hoses.
I'll take that one, Lee. So it wasn't, the 20,000 in the first line for consultants wasn't added to the bottom line to come up with your 43,000. That original top one was for the fleet review, and that was it. The bottom one was left at the 43,000 because if Linnell could unhide between C and G, you'll see that historically they've spent the last 2 years there was 80 grand, and the year before was 102. So I thought that if I took more than, like if I went back to what they've spent this year, they may be short next year. Based on a lot of this budget, when I went through, I looked at what the historical spends were, as well as what, if there's any changes as well.
No, that's fair enough.
Yeah, and that 20-odd thousand, that's year to date, that's their actuals. That is what we paid the consultant to do that first fleet review, that first sweep of it there, Councillor.
Thank you, Manager. Councillor Shoemaker.
Yes, thank you, Mr. Mayor. I have been through your budget, Lee. Probably not going to like me. But I have found $150,000 that I'd like to talk to you about. I understand the price point, the question around fuel and the challenge there, and certainly, you know, run a drilling business, watch fuel very closely. Can appreciate what we're saying there. I do think, however, perhaps we could wind that back. I'm talking about marginal savings, so stay with me here. Wind that back $40,000 to 1.2 million neat, which is still a $200,000 increase on what we've, $250,000 increase on what we've paid to date. I'm suggesting for fleet and parts, from the $435,000 proposed budget, the year-to-date actuals are $391, so I'm proposing we wind that back $35K to $400,000. I'm proposing small equipment purchases based on the fact our year-to-date expenditure is at $11,838. I see we've got $40,000 proposed in the budget. I'm proposing we wind that back $25,000. In terms of general maintenance, I can see we've spent 105 year to date. We're proposing 120. I'm proposing we wind that back 10. And internal plant charges, I can see we've spent 230, and our proposed year to date budget, we've spent 232, and I'm proposing we wind that back by $20,000 on the 251 proposed. And for the contractors, I see we've spent $25,000 year to date, and I'm proposing we wind that back $20,000. And if I add that up across those cost centres, we could save $150,000 in this business unit. That's what I would.
Can we
like to
have a
put on the
look,
table.
if you unhide between the C and G lines, can you have a look at the historical as we do it? Because
I
Yeah.
certainly appreciate what you're saying there in terms of historical
Yeah.
data. I am also very mindful you've got 1, 2, 3, 4, 5 very significant lines here, which you are proposing will be reevaluated once the vehicle review is complete. I understand the difference in fuel, the cost of fuel, and how that has changed the bottom line this year, but I'm also very mindful that between the year-to-date actuals and the proposed budget, there's a $413,000 difference there.
So the only one then I'd caution is your small equipment purchases, because that's your offsetting, you've got an offsetting revenue up the top for your recoveries.
Mm-hmm.
So we're actually probably way short in that line item than we should be, because we're recovering 180 up the top and we're only giving him 40. So that would probably be, out of all of them,
Yeah,
that'd be the
sorry,
one that
if
I
I could
would
just
caution
interject,
to
sorry,
not touch.
Manager, but we have, while you say that though, year to date, we've recovered 202 and only spent 11. So I'm a little bit confused.
That's because these guys didn't realise that the budget existed. They were told they had to pull back on expenditure, and so they've been charging it out to all the other departments. So all the other departments have been getting double whack. They've been getting hit with a small plan, and they've been paying an on-cost. And that's why the year before that, there was a $45,000 spend. The year before that was a $49,000 spend.
No, that clarifies it, thank you.
Actually, can I just say, so we've spent 34,000 in small plan purchases across in the other departments with no budget. So that's where those expenses have just been going. So parks and gardens and across some of the things, there's an additional expenditure that's just not shown in this budget, but it is shown in council's. But this is where the budget was.
So if we claw that back, that's still $125,000 saving across the board. And I guess I'm just thinking around the sheer reality that a 2% rate increase only equates to $373,000 variance according to this income statement. So
it's about 600, but the reason you're so far down is because you've lost 200 for memorandum.
oh, okay. So it's about 600,000. So it's about a 1% rate increase. So I just think, well, it's 0.5% rate increase, and being that there's so much work going in the fleet review, we talked about this 12 months ago, we're progressing that work. Certainly not what I would like to do, but unfortunately we have got to find savings in this budget, and these are maybe some items that we could consider at this point in time.
Yeah, thank you, Councillor Shoemaker. Just hang on to those notes, would you? So when we get to resolution, we can perhaps look to build those in. Before we do, any response from staff, Lee, manager, in relation to that? No? Okay, so we'll just note that. Councillor Froloff.
Yeah, thank you, Mayor. This budget's doing my head in, actually. I know that we've got to try and make savings, but we're also got to have the equipment for these guys to do their job and do it properly. So I'm worried about if we cut fuel and that, because, yeah, fuel is going up. One of my kids live in Brisbane, and she comes home and fuels up here because it's a lot cheaper. And these contractors and small equipment, I know we have to cut costs, but my concern is that the guys need to have this equipment to do their job properly. So what are we going to fail on? Are we going to fail to give them this, do the job that we're doing now out there and doing it properly, or are we going to just have it go back?
Councillor Duff.
Just a question. So as we've been going through, we've been taking vehicles out here and there. So has there anyone worked out so far how many vehicles we're reducing the fleet by, just on the general conversations we've had so far?
If I could just answer, I don't think at this stage we have. I mean, some of the managers, General Manager Meehan, for example, has looked at that in his budgets. But if I could just advise, I'm going to address the fleet numbers shortly. So I've got a few questions, and I will address the fleet numbers in that, and feel free then after that to ask further questions. First of all, Selena, Manager, with fuel tax credits, so you know this is my professional business. So I know a bit about the fuel tax credit system with diesel fuel rebate, etc. The $90,000, can you explain the methodology by which that is calculated at the moment?
So there's within the fleet register, there's a tick box put on that onto what qualifies and what doesn't qualify. And from there, an Excel 1 report pulls that out, and then it puts it into whichever category it goes into, and then it's run that way. But there could be, and what we found was that, like we don't have the ability. So when they did the KPMG audit, there was a whole heap of vehicles that idling that we could claim, but we don't have the tools or the resources able to make that substantiation. So we can only go off what's in our register and what's been ticked and not ticked as our means of being able to come up with that.
Thank you, Manager. So what I'm hearing is that we don't have a methodology which enables us to substantiate a claim to the ATO, and as such, therefore, we are underclaiming in relation to that. Now, I ask the question because when I run calculations, off-road diesel's 42.5 cents per litre, on-road, this is petrol and diesel, so off-road 42.5, on-road is 16.5. They're the current rates, and they'll increase, no doubt, at the next 6 monthly review by the ATO. Now, on the current budget that we've got here of $1.24 million, and please, I'm looking for you to correct me here, correct my rationale. That's based on $1.40 a litre, that's 900,000 litres. So if we use 900,000 litres, and if we were to average the utilisation between off-road and on-road, we're not looking at 90,000, we're looking at 250,000. I'm very concerned that we are significantly underclaiming our fuel tax credit because we don't have a substantiation methodology system in council to do so. Now, and it could be higher. We could be losing up to $250,000 a year here by my calculations. So I could be wrong, but they're rough calculations without knowing the pattern of usage on these vehicles. But as an accountant that practices professionally in this field, I'm very concerned that we could be missing, $150,000, $200,000 here in revenue that we should be claiming from the ATO per annum. General Manager, that being the case, organisations larger than ours are required to have systems by the ATO to do this. Mining companies do it. What does it take for us to get a system in place? Because I don't think we can afford to lose hundreds of thousands of dollars in revenue every year because we don't have a system to claim it from the tax office.
Look, I'll take that on notice, Mr Mayor, but just reflecting on a bit of historical data, when I arrived here 18 months ago, I believe that the audit was only just done, and Manager Selena will probably have a better grip on it than what I would. She lived it. But I believe that KPMG were engaged to review our fuel tax credits, and they come up with a figure of around $1 million, I believe, to be refunded. Anyway, we were challenged by the ATO, and there was negotiations with the ATO, and then they worked out that it was actually $700,000. We had to refund the $300,000 to the ATO based on that formula. But I also believe that, I'm not sure, I think it was about 10%. I know the charger, whatever the consultants charged us, was quite a considerable amount as well. So that's why I think the choice was made not to actually do that annually. But I accept what you're asking, Mr Mayor, that certainly we'll look into looking at some methodology.
I would suggest that if the consultants are getting wrong, that I've got to be careful what I say here, but tax law is such that you need to be careful who you use when you're calculating these things. And yeah, the ATO, I'm not surprised that the ATO didn't agree with the consultants. Having said that, I don't believe it's about getting a consultant in every year to do the calculation for us. I believe we should have record-keeping systems internally that enable us to monitor that we actually that we engage. I would be suggesting in the future we need to look to engage a taxation law advisor. It won't cost you a lot of money to provide this council with methodologies in relation to fuel tax credits. Now, if we are to look at the pattern of usage based on the current usage, if we're using 900,000 litres, Lee, and that's what your dollars tell us, if 60% of that is on road and 40% even is off road, okay, it might be higher. I don't know, but I'm still getting up around 250,000, not 90. And look, I don't know. Maybe it's 90% on 10%. I don't know, but it's certainly more than 90,000. There's no doubt about that. And I would have thought it would be worth us putting a business system in place to track that, so we can actually claim on when we put our claim in to the ATO. We know that it is accurate and we're claiming the right amount of money. I just don't think I can sell that to the community otherwise. Sorry, I would really think, Council, we need to address this issue. because we just can't afford to be burning money and not claiming it. Anyway, that was the first question. The second thing, so I think the fuel tax credit is understated due to the lack of systems. The second issue I wanted to raise is to put to the committee, to my colleagues in council, to throw out a challenge to the senior management team to, in this budget, reduce our white fleet, and I believe our white fleet includes utes and sedans, by 20%. Now that's a bold statement, and I can just sense in the room people are going to be concerned about that. But we have 114 white fleet across the region. Now, I'm not going to get into operations, but I consistently see dual cab utilities driving across the region with one person in them. Operationally, it is for the and I've had this conversation with the CEO this morning. Operationally, it's a matter for the senior management team to work out how you're going to make that work. But at $15,000 per vehicle, as you quoted, in real costs to this council, forget the revenue because that's an internal transfer. That's $350,000 almost that we can save with a 20% reduction. So that means we're spending $1.7 million at the moment as a council, $1.7 million on utilities driving around our region. 20% brings us $350,000 almost back into our budget. And I just don't think we can afford not to take those sorts of issues seriously. And I would challenge the senior management team to work through with your teams and your departments and strive to come back to this council with that 20% reduction. I'll go now to the councillors. What are your, and that's in addition to what Councillor Shoemaker's suggesting as well. What do other councillors think about that?
Look, I'm not going to sit here and say that we anything. I support you, Mr. Mayor, in the fact that I believe that we do have white fleet that are probably unwarranted, unneeded, and I think General Manager Meehan, I think I wasn't here for his presentation, but I believe that he was offering up 4 vehicles. Correct me if I'm wrong. I think there was 4 vehicles saved there. 5, 6, 7 vehicles, and then we were talking about another 2. 20%. That's not saying that that's not.
I would suggest that my 20% includes whatever general manager saved.
Yeah.
So 20% is going to be 22 vehicles. If you've got 7 already, well, you're only looking for another 15.
Yeah, that's right. So all I'm saying is, not saying that's not the magical figure and that's something that we can't achieve, Mr. Mayor, but I would like to fully support you on the fact that, we'll throw the challenge out to the senior staff and see what they come back with. And I'm sure that they've got the indication now that as a council, we're trying to find money savings everywhere we possibly can. So I'm certainly not against what you're saying, but I'm just erring on the side of caution as far as 22 vehicles in one hit. I'd like to just, if we can get to that, bloody beauty. But I'd like to just have and I understand you're only throwing out a challenge. You're putting
Throwing a challenge. I'm throwing a challenge to my colleagues here. Are we serious about dealing with this deficit or not?
Yeah.
Because we are going to have to get more serious than we've been to date to find savings. And I know I'm going to upset some people saying this, but the reality is, and Councillor Shoemaker's tried to put some suggestions forward today. I'm sorry, but I don't think we're going far enough to find savings. We're going to still come in at $4.5 million deficit where we're tracking. And that's not going to get this council into the financial position it needs to be sustainable into the future. And we're going to have to start work on this now. And it's going to be a 3-year program. Make no doubt, it'll be a 3-year program.
And that's what I'm saying.
But we need to start chipping away. I don't think that we can come in 2 years' time and say we're going to do a 50% reduction. I believe we should do it transitionally and phase it in.
Like all I'm saying is that, and like I said, I am not saying that you're wrong. I'm not saying that it's unachievable, but I just want to just be wary, as what Councillor Froloff said. We need to make sure that we can still deliver the services that the ratepayers expect, and if we can get to 20%, I'm fully there. Like, I'm not saying no, we're not going to do it. I'm fully supportive, and I'm happy to see what the managers and the staff and all that bring back. And then we can have the discussion. So all I'm saying is, not saying that I'm not supporting you. I'm fully supportive of you, and what you're saying is 100% correct. We have got to look hard, and we've got to look everywhere to find savings. And I think in this budget process, I think this council has done a very good job of that. And I apologise for not being able to be a part of the whole system, and I've kept up to date with it. But all I just want to say is that we just, by all means, let this staff go away and do their due diligence and take up the challenge. And I hope they come back and say, well, Mr. Mayor, there you go. You've asked for a 20% reduction, and here we go. We've got 21. That'd be the perfect outcome. All I'm saying is I want to feel comfortable that the vehicles that we do give up are the ones that we can afford to give up and not reduce the service levels and hamper our staff in any way to deliver the services. That's all I'm saying.
Yeah, and that's a decision, an operational decision for the senior management to make that decision as to where vehicles can perhaps be, where we can work smarter, share vehicles, such that we to get that 20% without compromising the services. I've been through this time and time again. This is the RFI I got back on our vehicles. And look, I'll be honest with you, I was shocked. It's worse than the community are telling me it is. I'm sorry, that's an inflammatory statement, I suppose, but it is. Go through that. Every councillor's got it. The number of vehicles on there that have been running around that our staff have got, I believe. Now, I've always said job security for our staff is sacred. I will always believe that. But I don't want to see this council in a position in 3 years' time where we're having to be making decisions like other regional councils not far from us are right now. And they are shutting down or reducing hours on libraries. They're closing customer service centres. They're reducing hours on pools. And they're actually putting staff off. And they've got union marches in the main street of their towns. I would hate to ever see us in that situation. So what I'm trying to do is identify here where we can do this without affecting the operations and without affecting the job security of our staff. But, Councillor, I believe that there is plenty of scope in that report to find 20% if we really put our minds to it. That's my honest view of the situation. Yeah. So I'm throwing out the challenge. Other councillors? What are your thoughts? Councillor Henshin?
Yeah, look, I'd be first to admit I was seriously vocal about council's operations over years gone by, as previous councillors sitting in this room would know only too well. And I'm all for, Mr Mayor, your 20%, trying to achieve that, but I'd like to see us take a slow and steady approach and be realistic and meet the goals rather than throw out a 20% challenge there and all of a sudden we are seriously struggling in some departments to deliver services that have been seriously slashed. And I'm all for saving money in this budget. If you and the fuel costings and savings, if you work on 10%, 12 months ago at $1.15, 20% of that was 23 cents, which is $1.38, which is where we're at the moment. So you put another 20% on fuel, and we know where we're going to be with fuel prices. So we don't necessarily, and I'm hearing with the fuel rebates, for sure, there's probably work, sure there's work we can do in that. That's a dangerous arrow that you can sometimes fire or get fired at you. As the previous council, and I remember those figures very, very well, put a shutter down everybody, I'm sure, everybody's spine in this operation. It was a lot of money, it was enormous, and it got a fair bit of publicity at the time. 20% I think possibly achievable, but I'm not sure whether we aim for 20% straight up. I'd like to see an approach where we can work and see what works first before we just pluck a figure out of the sky. And as Councillor Jones has alluded to, yeah, and there's been some great work done by our departments, but I'm sure everybody's up to accepting a challenge, but I think probably small steps to start with and see how we go rather than major ones and we end up finding ourselves in a fairly big hole. But yeah, I'm all for finding savings, but I think we've got to be a little bit cautious of how we attack that.
Look, I'm endeavouring to be very cautious, Councillor. I hear your views. I don't believe the 20% reduction is going to compromise our delivery of services to the community. If I thought it was 10, I'd put forward 10. But based on the work that I've done in reviewing that document extensively, I've been through every vehicle, who's got one, who hasn't got one, what they use it for. We talk about delivery of services. We have a number of vehicles that quite frankly, I can see some vehicles that are driven to work and driven home. And not much happens between 8 and 5. They're parked at the office site. Now, correct me if I'm wrong, anyone in the room, but we do have some vehicles like that. I believe that the challenge is achievable this year, and we might have to find another 20% next year. I don't know, it might be 10% next year, but, we've got to start, I understand slowly and cautiously, but it is a 3-year process, and we do have to start moving forward at some point in time. Otherwise, what I don't want to see us do is leave it until year 3 or year 4, and then we're having to implement major cuts to get this council back into surplus. You can't run deficits every year, because when you run deficits every year, you end up not funding your depreciation. And when you don't fund your depreciation, you run down the amount of money you've got in your bank account to do future renewals. And that is dangerous. Then you're in a situation where you've got very little money in the bank and you've got to go out and borrow. I come back to what, unfortunately, someone wiped off that whiteboard. I left it there this morning. Someone wiped that off. And it said from the QTC, affordability, ask the hard questions and be brave. And that put that off that board the other day. So what I'm trying to do is look at the affordability of 114 utes. I'm asking the right questions, and are we being brave about making the tough calls now before we get in a situation where we've got to make really hard decisions? So look, putting that out there, again, Councillor Shoemaker, your thoughts?
Yes, thank you, Mr. Mayor. I'm fully supportive of the challenge for 20%. Certainly, I note that won't be easy, absolutely. This whole budget process, there's been nothing in this budget process that hasn't been easy. I certainly have not slept easy this last month, I can assure you of that. Been through every single line time and time again. Just know how hard it is for our local community at this time, but also how hard it is for our council to deliver the services. And I understand and fully respect that when it comes to service level discussions, we're going to have those in alignment with our budget. And that may mean that the giant list of things that your council is currently doing for you, because we're a good council and we love our community and we want good outcomes, that may have to change. And it's been harrowing just to see time and time again, oh, we pay that to the state. We pay that to the state. We don't have a choice over that. We don't have a choice over this. Our overheads, many of them are costs that we can't deliver a service to our community for, but they have to be paid. Someone has to pay them. And in terms of the vehicles, like I've done a calculation. At the last check we had in this discussion, we were informed by CEO Mark we have 327 full-time equivalent staff, and if you divide the 114 vehicles between that 327 staff, that's 2.8 people per vehicle. I think when we really start to look at this, we're going to have to find ways to work smarter, not harder, and make better use of the resources that we have. And I'd certainly appreciate and do appreciate all of the work the team has done. I know it hasn't been easy for anyone to get us to this point, and I agree we're all going to have to roll up our sleeves and keep going at this point in time. I'm sorry, but that's just the way it is in my view.
Yeah, look, I just want to touch on the fuel issue you raised too, Councillor Henson. I was researching the RACQ data. The average diesel price in regional Queensland last year, for the last 12 months, is $1.26. Currently, it's around $1.36. If it goes to $1.50, if it averages $1.50 for the next 12 months, Lee, even at $1.50 average for the next 12 months, Councillor Shoemaker's budget, 1.15 million, is your 900,000 litres. So, again, we can't afford to not take on board these opportunities to find savings. And, if we say, well, look, it's fine, let's put it in the budget and then go out and do a budget revision in first quarter or second quarter, we still have to, as a team, go out and not sell this budget. We've got to get and communicate this budget to the community. And if we overstate the deficit, it's making the community nervous. And we've also got an ethical responsibility when we set the rates to be dealing with accurate expenses. If we think our expenses are going to be here, so we set our rates there, and then we find, oh no, they actually end up being there because we did a revision later and the actual cost of Cunning Council came down because of the things we've talked about today, well, we go, oh, we could have set the rates there. So ethically, we have to really try and get this right as much as we possibly can up front before we have that rates discussion. Councillor Jones?
Yeah, look, again, I just want to reiterate the comments that of mine, and I'm sure I'm not putting words in Councillor Anshin, but when I said that I just want to be cautious with the fact, yeah, like I said, 20%, if we can achieve that, that's perfect. But I just want to make sure when we work through it, we don't just say we want 20 vehicles gone. If it only means that we can, and these staff can come back and say, I've got 18 that I can give up, but I really do need these other 2 or whatever. That's all I'm saying is if they can justify that we can give up 18 and not 20, I don't want to see that 2 vehicles create such a problem in the community. That's all I'm saying on that aspect. And taking your point there I just want to clear up one thing too in Selena's defence and that not defence, but I just want to clear it up. The FTCs and all that sort of stuff that we were talking about, and yourself there saying that, we need to, and I totally agree with what you're saying, we need some sort of a process in place that we can claim the correct amount of return back every year. But I don't believe that the council has missed out on any refunds in the past. And with your comments in regards to the $1 million we put into the ATO and then they challenged it in the 700,000 and all that sort of stuff, that's the money that we were entitled to on those FTCs. And that's how you were saying, like, leave it till they say. There's probably media watching. I just want to make sure that they understand that the council as a whole, we might have taken 3 years to collect it, but we got what we were entitled to. We didn't miss out on any of that. But I totally take on the point of what the Mayor's saying, that as a budget and having correct and accurate figures moving forward so that we can put a budget together on correct figures, we probably do need to, I don't know how much it spends, the Mayor know more than what I do about that. If we got a process in place where that we could actually collect and get those, reclaim those FTCs every year, rather than have like put in 90 and we could be in 250, makes a hell of a lot of a difference, especially in the climate that we're operating in on our bottom line of the budget. So I just wanted to clear that up. Is that a fair comment and comments around that in case that it's misreported in the media that the council has missed out on hundreds of thousands of dollars FTCs?
Yeah, look, I would certainly acknowledge, if the media are watching, council has rectified any historical issues, acknowledge that. I'm more talking about the future. Let's make sure that next year and the year after we get that. That ATO agreed settlement that was done after their audit, what years did that 3-year cover then? Which financial years?
I have to take that on notice, Mr. Mayor.
Yeah.
I think they went back like 5-7 years. It wasn't a 3-year. They went back as far as they possibly could.
Right. Okay. So how long ago was that done? In what do we know? Was it 2017, 2020, 19, or? So how long since the ATO looked at our books in terms of fuel tax credit? I guess my point, so it's possible that for the last 12 months, we haven't claimed what we should have, for example. Look, I'm not wanting to create an issue in the media, but I mean, these are the stones we have to unturn. We need to be honest and open about this stuff, and we've got to get it right. I'm happy to take that on notice, Selena. Come back to us later. I certainly don't want to put you on the spot, Selena. And please don't think that I'm, Selena, you need to defend yourself. This is no criticism of the staff. This is about our business systems, General Manager, and as part of that business system review, do we need to look at putting this on the agenda? Yeah.
Most definitely, Mr. Mayor. And like I said, it's nothing to do or no reflection on Selena or the finance team at all. It was a decision made at the time by the council that that's what they would do in future, was to just claim the minimum or whatever the minimum amount and then have it reviewed in 5 years, as they did, because they didn't have the methodology there to work it out. So I will investigate that for you or for the council and bring that back to you there with the result there.
Yeah, thank you, General Manager. Councillor Potter.
Yeah, thank you, Mr. Mayor. Look, I fully agree with you with regards to the fuel tax credits. There really does need to be a process in place. I've worked for places before that have had that in place, and you can see up front exactly how much they're getting, and that's definitely what we need. Look, I know it's going to be a challenge to get to the 20%. General Manager Meehan's already done 7 of those, so there's 15 vehicles left in that. To be quite honest, most of the phone calls I get or emails I get or meetings I get always mention the fact that there's too many vehicles on the road, especially between here and Anango and everything like that. But, you know, and then there's only one person. So, to get those phone calls all the time, it's really quite... there's not much I can do about it because it's part of the... It's part of the way council works, but I'd really love to work with you in this, and I think the challenge does need to be put down. Whether we can get to the 22 vehicles, I don't know, but I would really love to see us get somewhere near that at least. But yeah, I'm sort of with you on this one, Mr. Mayor.
Thank you, Councillor Potter. Other councillors? Councillor Duff?
I'm with, I support exactly what Councillor Potter said. I get the same complaints. Also, these are big figures. Like if you could reduce the vehicles back, like I just talked about the $250,000 just in fuel, like, and then you've got your registration and all of those things. And yeah, we have to make tough decisions. We have to be bold. And I just think this is we need to start somewhere. And 20%, I think it probably into the future it'll probably have to be like next year and keep looking at it. But I think 20% is a good starting point.
I'm just, unless anyone wants to discuss it, I'm probably keen to get to a resolution now. It's after 5, so just wanting, Councillor Shoemaker, would you mind taking the lead on providing a motion for us? So then, look, can we just put in that the plant and fleet operational budget with the following adjustments? And I might let you take over now. Thanks, Councillor Shoemaker.
Sure, thank you, Mr. Mayor. Let me find the right spreadsheet, sorry. So I've got a $40,000 reduction in fuel costs, a $35,000 reduction in fleet parts. Noting the feedback will leave small equipment purchases. A $10,000 reduction. Hey? Yeah, sure. $10,000 reduction in general maintenance. A $20,000 reduction in internal plant charges. And a $20,000 reduction in contractors. So that's 75, 85, 90, 100, 115. Sorry, just let me do that. Maths was not my strong suit. 125? Yep.
You do deliver me, you want to say something?
So it's $125,000 saving. And then do you want to include that a report in another line, that a further report be brought to council in regards to the reduction of white fleet by 20% in this next year's budget? Or should I quote that as the 21-22? Yep. Full stop. Be adopted. Yep. Yep. I'm happy to move that.
Can I just say one thing about the 20,000 reduction on the contractors? A problem, with the hydraulic services we use locally, yes, we can stop using them, but then we'll end up having to wait and order the parts genuine from Brisbane or wherever they hold the supplies. So where a machine might be down for 2 or 3 hours here while we get hoses made locally, if we have to source these hoses from Brisbane, Sydney or Melbourne, these machines are going to be down a lot longer.
Yeah, thank you, Lee. Note though, looking at year-to-date expenditure, it is only at 25,000, so you would still get 24,000 almost with a $20,000 reduction. Yeah, so hopefully that won't cause any major issues there. So Lenore, we've got that right. So thank you, Councillor Shoemaker. You've moved that. Do we have a seconder? Thank you, Councillor Duff. Speakers for or against? Councillor Henson. Thank you.
Yeah, look, I can't support this, I'm sorry. Knowing only too well, it's just what was mentioned there. If we have a hydraulic hose bust and we've got yellow fleet that's down, you might not see that machine operate for 2 weeks, let alone if it's in the country. Hydraulic repairs are a major thing, a major part of maintenance. $20,000 reduction in that, I mean, correct me if I'm wrong, but we could have a hydraulic hose on some of our machines that's a couple of $1,000s. Yeah, exactly. So, no, I'm sorry, I can't go along with this. And fuel reduction costs we don't know where fuel's going. I'm sorry, I'm not supportive of this.
If I could just clarify for you, Councillor Henson, that with the amount of fuel we've consumed over the last 12 months, with the amount of fuel that Lee's projecting here, 900,000 litres, Councillor Shoemaker's reductions don't put that at risk, even at $1.50, based on, or actually 880,000 litres would be the calculation. So at $1.40, so that would even at $1. So the other thing is you've only spent in contractors with hydraulic hoses $24,000, $25,000 year to date anyway in this past 12 months. So unless we're going to expect that there's going to be a 50% increase on that over the next 12 months, I can't understand why the increase in the budget. But anyway, that's fine. Councillor Duff.
So I listened to what Selena said, and also GM Jarvis, that they said the historical data on those contractors was up to 80,000 in the 100 year before. So obviously there was a COVID or whatever changed made it drastically reduce. So I'm prepared to move an amendment on that because I think that there's concern from 3 senior staff here, and I'd like to move an amendment that we put that back up to 40 but take it off the fuel. I think we need to have a $60,000 reduction in fuel because if we're going to reduce the vehicles, and based on what the Mayor said, I wanted to change it to leave that.
Thanks, Councillor Schumacher. I think Councillor Duff got your point there. Thank you. Councillor Schumacher, it wouldn't be an amendment. It would be a change to the motion and would have to be agreed to by Councillor Schumacher. Councillor Schumacher?
Yes, look, hearing everyone, more than happy to make that amendment in these. So can we please change the reduction in fuel costs to $60,000 and take out the reduction in contractors? Fully understand the costs of hydraulics, running drilling rigs myself, completely hearing you, and certainly don't want yellow fleet offline. Also very mindful we've had discussions around replacing a lot of our yellow fleet that's at age. So I expect that some of those challenges that we may have had previously when we're looking at expenditure like $80,000 on hydraulics, maybe we won't have that this year, but fully understand the extent of what it means to have machinery down by all means.
I also just want to note, while I'm hearing everyone in the chamber, I also want to note the fact that this, even with the $125,000 budget savings that I'm proposing, this is still a $2.458 million budget. So it's still a significant budget. And when we start looking at the challenge that we've put forward, I think this is only just the beginning. So look, I will not budge on not finding savings in this budget area. We have to find them somewhere. It's getting to the crutch of our budget discussions. And in every budget that's been brought forward, I've heard every story we all have, and I fully understand how difficult this is. It's been 10,000 here, 2,000 there. It all adds up, and it all makes a difference to the bottom line. This is not as easy. It's not easy for me, and I know it's not easy for you, but I won't budge on this one. I actually think I'm going easy on you, Lee.
Thank you, Councillor Shoemaker. We'll take that as the closing comments as the mover, and we'll go to the vote. Those in favour? Those against? Okay, motion carried. 5 votes to 2 with Councillors Freiloff and Henschen against. Okay, thank you all. I think it's time that we close the meeting. We can pick up communities in the next meeting. So I'll now look to close the meeting at 5:15 p.m. Thank you all for your attendance and have a wonderful evening.